The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the March edition of Digging into the BI. This is where members from the Maryland chapter and the DC regional chapter get together and look at the latest issue of the Better Investing magazine. And tonight we're going to be looking at these four stocks, Qualcomm, Zoetis, DoubleVerify, and LKQ. Zoetis and LKQ are the two featured stocks, a stock to study an undervalued feature. We're glad to have you. Whether you're a member of Better Investing or not, you're certainly welcome. Let's go to the next slide and let's keep going. So this is a standard disclaimer inside our community, and that is that we are doing this presentation for educational purposes. Investors should conduct your own research on these particular stocks. These are presentations done by other folks. They will try to alert you if they actually own it in their own personal portfolio or in the club portfolios that they're part of. And remember, if we're showing you any websites or locations, it's not an endorsement of Better Investing or of us that that's what we think is good. And as you can see with that blue underline, this is going to be recorded and we'll put it up on our YouTube channel, and I'll show you that location in just a moment. Next slide. So this is Better Investing. And again, looking out in the audience, I see a lot of people that are in our community, but you don't have to be a member of Better Investing to be here. We are an investment education organization. You can see anytime there's a blue underline on these slides, it means it's a hyperlink. So please make sure to download the handouts, and I'll show you that in just a moment. But we're a long-term fundamental investing organization. And like I said, all of the people that are doing presentations, they're volunteers from either Maryland, DC, or Virginia. We're certainly glad to have them here, and we're certainly glad to have you. Next slide. So here is the YouTube channel that I was telling you about. You can find it quite easily by looking for Digging into BI on YouTube, and you'll be able to see it. All of the presentations are up there for free. There aren't going to be the slide decks up there, and there won't be the completed SSGs. You can only get that if you're here with us live. We have been slowly growing this channel. We'd certainly like you to be able to do this and share it with members in your club, people that you're looking to be a part of, and you can see all the presentations that we have for about the last 2 years there. All of the presentations are broken up into what YouTube calls chapters. If you look at that blue box on the right-hand side, and that means that if you look down at the bottom of the video that you're on, you'll see little dash marks. So you can advance just to the stock that you want to look at. In return for giving you this free program, we're going to ask a couple things for you. We want you to like each individual video that you're on. That helps with the algorithm over at YouTube. And share this video with other people, and make sure to subscribe to this channel. Again, it's free. You do not have to be a member of Better Investing. You just have to be interested in looking at long-term fundamental investing. Next slide. So here's how you can find the handouts. Again, I've had this stuff with respect to if you have trouble with your audio and stuff. We haven't really had that in a long time. But if you do have troubles, you can be able to reach us in the chat box, and we'll get to you. But look at where the green arrow is going out to the handouts. That's where you're going to see tonight's completed slide deck, as well as the 4 completed SSGs for the presentations that we're doing tonight. Please make sure to get them before we shut things down tonight. And again, you can share that with whomever you so choose. Next slide. So why do we do this? Well, we're trying to be able to show you the resources that are available from Better Investing. If you're not a member of Better Investing, again, you're still welcome here, but there's also a free 90-day trial, and there's where that hyperlink is up on the top. We're trying to show people that are beginners or maybe uncertain of their judgments on the stock selection guide or the PERT report. We're trying to show you what, are really sort of best practices. It's something to be able to get involved with the Maryland chapter and the DC regional chapter. We want to promote our model clubs, and we're also trying to promote your club in the Club Connect program. So if you want to be part of the Mid-Atlantic community, if you're here and you want to learn more about it, it's great. I know there's a lot of people that are outside that are on here tonight that aren't from Maryland, DC, or Virginia. Welcome. We're glad to have you, and please participate. Next slide. So in just over an hour, we're going to go over 4 stocks. And as I said at the beginning, the 2 featured stocks are the stock to study and the undervalued feature. Then we're going to have 2 other stocks that are going to be presented, and they'll tell you where they come from. But you can see down at the bottom, you can get them from personal experience. They're in your own portfolio. If you heard about them on like the Mid-Michigan Roundtable or Rocky Mountain chapter, if it's in the top 200 on our community or in Ticker Talk, wherever it is, we're really just trying to show you all the places with your BI membership that you can find really, really good stock ideas that hit our methodology. Next slide. So here's how you can be able to see what the upcoming releases are. These were announced in January 7th. This is where we found Zoetis and LKQ. And you can see the notice that comes there. I did notice as I was putting this together that they normally get these out about 6 weeks in advance or so. They don't have the April ones up there, which they normally would. So I had to reach out to headquarters today to see if we can find out what's going on. But this is where you can find it. You don't have to be a BI member, and that blue hyperlink will take you to that location. Next slide. So you can also, if you're a member of BI, is make sure to sign up for the email announcements. You can do that by going to where that red circle is up on the top. That's your My Account. Once you do that, you can go down there and you're looking for the email product and subscription information. I have the green circle over on the left. From that, it opens up where that green box is over on the right. And make sure to be able to sign up for the BI weekly newsletter. I have that in the yellow highlight. And then also make sure where I have that arrow pointed over on the right-hand side to the local chapter news so you can get the news in your particular chapter. Hit the Save Changes and you'll get it. Next slide. So here is what you get if you sign up for that BI weekly newsletter, the one that was in the yellow highlight. This is just for BI members, but it highlights some of the things we're doing at the national level, tells you things about some of the events like Ticker Talk and Stock Up, and some other first cut reports. This usually comes out at the close of business on Thursday. And if you signed up for it and you're not getting it, check your spam filter. And here's what I was looking at. The 2 that caught me is the first arrow up on the top, the sort of gold with a black border on it, is that those are the top 40 stocks or companies that are invested in or held by investment clubs. So it's a great place to look for stock ideas. And then down below that is just sort of some ways to be able to sort of help you with learning. And I think that's dealing with a guide for learning with new investors. So I found those 2 to be really quite interesting. Take a look at this on your email list and see if those are the things that interest you. Next slide. So you can also connect with us on Facebook. This is for both the DC regional and the Maryland chapter. We do get notices out on this event. I'd like to have some other people help me out with it so we can be able to feature either your club, if you have a Facebook page for your club, or if you just mention it on your own Facebook page. It's a great way to promote yourself. You can be able to hyperlink with us or tag the Better Investing DC regional chapter in there. Will show up on our feed, and it's an opportunity for you to be able to reach out to other people in our area that may be interested in joining your club or learning how your club works. Again, you don't have to be a BI member to see this. Next slide. So here's the stuff from the Maryland chapter. They have quite a few things going on. They do a really, really nice newsletter over on the right-hand side. You can see that. They're doing their in-person class. That's in the center with the red line underneath it. That's they do an in-person class down at the College of Southern Maryland in Prince Frederick. And if you like to be able to do that, that's worthwhile. And then also, if you are in Maryland, they have their stock pickers contest. It just started this weekend. And if you take a look at that location for it, you can download the form to be able to fill it out and the like. And all you have to do is be a BI member from the state of Maryland to take a look at it. It just runs for about 8 or 9 months, but it's just kind of fun. You use fake money, but it's nice for bragging rights. Next slide. Cheryl, tell us about the DC chapter.
All right, here's some of the events that are going to be coming up for the DC chapter. Again, digging into the BI magazine for the follow-on months. We have 2 model investment clubs, McNova in Virginia and MCMC in Maryland. And also we have SSG classes that we're going to be doing this spring and in fall, and be on the lookout for that.
Thank you. And Lisa, why don't you tell us about your club?
Hey, I'm a member of the Model Investment Club of Northern Virginia, McNova, and we started in 2008, have about 14 partners, and we meet on the second Tuesday of the month. And our next meeting coming up is March 11th at 7 o'clock, and below you'll see the link for the meeting, or if you want to call in, either way. And our stock is to be determined, and I believe our education is also, I know we have it, but I just don't have it up here yet. But definitely check us out.
Thank you, Lisa. Let's go to our next slide. Greg, you want to tell us about your club?
Sure, it's been around for since 1992. We have about 40 members, including student partners. We meet the third Saturday of every month. We don't have anything new or exciting coming up lately, but I know we will be having, I believe, an open house in the upcoming months in terms of looking for new members. Very diversified portfolio. And right now, there's a lot of interest in terms of in AI stocks.
Very good. Thank you. Next
You're
slide.
welcome.
Armida, tell us about your club, or at least one of your clubs.
Thanks. I'll share with you about Montgomery County Model Investment Club. We started in 2017 and we currently have 6 partners. We meet on the third Wednesday of every month. This month it'll be on March 19th, and we meet online from 7 to 9 p.m. You can join us, please, at this link, global.meeting.com. And we look forward to seeing you. And our stock to study this month is Zoetis, one of the stocks that we'll be discussing tonight.
It'll be a different presentation. It's not the same person doing it. So it'll be nice to hear 2 different versions of the same stock.
Yeah.
So, Miriam, I see you joined us. Thank you. Tell us about your club, since you're the newest member of Happy Destiny.
Thank you. I'm very, very excited to say that I am the newest member. These people are great. We meet on the third Friday of the month at 7 p.m. or what is it, 6:30 to 9:30 p.m. And in terms of education, currently we've been talking about having a policy statement. So these are rules that everyone abides by in the investment club. They answer lots of questions, and believe me, I have many every single week. So you can reach us at digging into BI, as you see on the screen with dots in between the terms, at gmail.com. The stock study that's coming up is intuitive surgical. Yeah, thank you.
Yeah, thanks, Miriam. We're glad to have you. She joined us because we met her at Bink. We've met her 1,000 miles away from where we gather. So, Cheryl, tell us about how people can do Club Connect.
Well, Club Connect is an interesting program. It's not brand new, but it's been only around for probably less than a year. So it's where clubs and people can kind of proactively connect with clubs that are looking for additional partners, or with people that are looking for a club to join. And it unites the two. And you can also look into different types of clubs and how different clubs are run if you're looking for a club. And if you're looking for partners, again, you can ask certain questions and find out what the investing methodology is that person wants to join. So it's really an interesting program to look into.
Thank you. And since this is digging into the BI, we do want you to be able to look into the magazine, hence the name of it. You can get it from the e-magazine. We were talking about this as we prepped last night. I haven't gotten my hard copy through the post office yet up here in Baltimore. But again, you can get the electronic version, and you can see that over on the left-hand side. It's a way to be able to see it on your computer, your laptop, your tablet, smartphone, any kind of electronic device rather than waiting for it to come in the post office. So keep that in mind. And like I said, I think some of the other folks said they have gotten it. I just haven't seen mine yet. Next slide. Let's show you how to be able to find stuff. First of all, to be able to sign up for the digital version, this is the page that you're at. And if you see this over under the Learning Center in the BI magazine, where that green arrow is over on the left-hand side, that's Better Investing Magazine for mobile devices, and to be able to sign in and create a password for that. It's different than what you have on your traditional BI membership. And then the other thing is, see where that red arrow is. That's every time when we have a featured stock, that's a stock to study or the undervalued feature, is that they usually will say that there's some additional resources on the website. And this is where you can find those additional resources, is to be able to click on there. And they go back for, I don't know, 5 or 6 years on some of the additional resources. But you can find all these magazines where that green box is in the middle that says View Magazine Issues. Click on it and take it there. Next slide. So we always like to feature something in the magazine, and I found 2 articles that were really interesting, particularly for those of us from Maryland, D.C., and Virginia. Alexandria Armstrong, she's a native Washingtonian. She's retiring after writing the financial planning column for 48 years. And just reading her background on that, I didn't realize what a fascinating woman and all the things that she had done. It was really, really good. And I found, some of the quotes that she said at the bottom there over in the left-hand side. I made it my mission to help women control their financial futures, and don't confuse lack of knowledge with inability to learn. It's an acquired skill. And I think that's appropriate for anyone. But again, really, really powerful story on how she, is leaving after such a great legacy. So take a look at that, and let's go to our next slide. And here's someone else. He says he lives down in Melbourne, but he was actually one of the founders or one of the early members of the Pinnacle Group Investments. And he was also, anyone can be able to reach out and tell their story. And Armida, I think this is your other club, is it not? If you're unmuted. Can't hear you. There we go. So, yeah, this is a guy from your club and the person who got everything started, David Garnett, right?
This is Daniel Garnett, Charles Bright, and myself. We founded Pinnacle Group Investments back in 1996. Matter of fact, this year will be 28 years for us. And so anyone who's interested in joining a club, we're located in Silver Spring. We meet the second Saturday of every month, and you're always welcome to come join us. Also, this coming weekend and quarterly, we have an in-person meet and greet where we get together and share knowledge and stocks and family information and friend information. So you're welcome to join us. Like I said, matter of fact, we're meeting this Saturday, March 8th at 2 p.m. at my home. If you're interested, feel free to send me an email at armida@aol.com, and I'll send you the details.
Yeah, it's expanded just from her one club to now it's like 3 clubs that are there. Great way to socialize. It's a potluck. We bring food and talk about stocks. So it's a great time. Next slide. There we go. Got a lot of interesting things going on in the BI community. I'm just featuring a couple of them. There's a Learn to Earn workshop that South Florida's been doing. They have one here this Saturday. And then also, I like the ones, the Northeast Ohio chapter, the Cleveland area. One of their directors over there, Kathleen Richards, likes to talk about the acid test. And it's a great way for beginners to just sort of understand, am I looking at the right stuff? So keep a look at those things, but there's a whole host of other chapters that are doing things that are really, really interesting. And if you join our chapter, we could actually have someone who can help us get this presentation up in the BI magazine as well. Next slide. So we've done a whole bunch of talking and all. Now let's talk about stocks. So we're going to start with Miriam, and she's going to tell us one that she found in her personal portfolio, and also it's in the top 100, Qualcomm. And then Greg's going to do the stock to study. So let's go to the next slide, and Miriam, get us started.
Thank you. Yeah, Qualcomm is a microchip company. They also make routers, so they manufacture and then sell parts to make computers and other stuff. And I've gotten interested in it on a personal level. I actually even recently bought a couple of stocks. That's kind of what I do when I'm really invested in learning something. Probably not the best technique, definitely not a BI method, but that really gives me the chance to focus on them. So this particular stock is interesting because as you can see on the images here, there's a revolution right now in terms of technology with AI, Internet of Things, etc. So can we go on to the next slide, please? So one of the unique things about QCOM, which differentiates it from some of the competitors, and there are a lot of competitors actually, but the one that I really kind of found in a lot of the stuff I was reading is Intel. So you can see Intel as a main competitor in some ways. So they both make machines that that process information, chips. That the interesting things about chips is they take, for example, energy. If you had a laptop, how long does your laptop take to charge? Or if they were developing data centers, how much energy does it need for cooling? So when you think about this aspect, the QCOM chips are actually more energy efficient than Intel. So that's one of the ways to think about the difference in the two. Another interesting thing that I learned is ARM architecture. To be honest, I don't remember exactly what ARM stands for, but it's a type of the way that these chips are built, like the structure of the chips itself, make them different and simpler, quote unquote, than Intel chips. And they also require information to be coded on them in a different way than Intel. So then companies that are installing them are kind of making a commitment in different ways because of this ARM architecture, which is seen as a plus to many. It's more powerful than Intel on simple AI tasks, but Intel works better for heavy workloads. And also another thing that some people might not like is the fact that software needs to be recompiled and sometimes modified, since ARM architecture relies on a different set of instructions on what to do with data than Intel chips. So that's kind of like the very minuscule detail that differentiates QCOM from one particular competitor, but as you can see, there's a whole bunch in the semiconductor industry. Next slide, please. Okay, so if you take a look at historical sales and earnings per share, the historical price has been going up for the last few years. Well, in very broad terms, the sales has grown 7% since in the last 10 years. The earnings per share also has increased quite a bit. And you can see that there is this gap between 2017 and 2019 where the earnings per share decreased. And so there was a deal where the company was trying to merge with another company. The merger did not work out. It had to do with a permission from China because part of this other company, it was a Dutch-based company, but they had some crucial parts of it in China, and they couldn't get the regulatory permissions to merge. So that decreased the EPS in those years. If you ignore that, if you ignore the little dip, they are the lines seem a little bit parallel, and they're sloping upward, although the slope isn't very steep. Thank you. Next slide. All right, so this is the NXP deal that was, so this details this was the explanation I gave you. NXP was a company in Netherlands and there was part of it that was Chinese, and the Chinese authority refused to provide regulatory approval, and so that was an issue. Next slide, please. All right. In comparison to its peers, Qualcomm, as you can see, is right between, I think it's Broadcom and AMD, and then it is doing better. It's also performing. The black line is above the green and blue line, which are NXP and Intel. Next slide, please. In terms of pre-tax profits, you can see that they're doing quite well. The average of last 5 years is 27%. Next slide, please. In terms of return on equity, the average of the last 5 years has been 83%. So that's a big shift. And again, the year that is questionable is the 2018 year, which is the year that deal fell through. So you'll consistently see that show up in these. Next slide, please. Debt to capital, 51.4, which I think we're in a safe range. So that's pretty good. Next slide, please. So if you take a look at some of the headlines from the news, you'll start seeing this ARM-based processor thing, right? And it's saying that they could power up about 50% of client PCs in the coming years. So basically, because of this quote, Johnston Holocaust recently claimed that retailers are grappling with a high return rate of Qualcomm-powered machines. This ARM architecture requires software to be kind of reconfigured so that it works, and so some people are returning them. But increasingly, there are some companies that are actually adapting to it. So Qualcomm expects 30 to 50% of laptops to transition to non-x86 platforms in the next 5 years. Next slide, please.
5 minutes, Miriam, 5 minutes.
Oops, okay. All right, I guess they're discontinuing some of their products like modems. Next slide, please. Their investor presentation actually was very hopeful. They've been working on working with Samsung for their phones. Next slide, please. Okay, so over here, one of the things that, so I actually did this, I did this stock study a couple times as I've been learning about AI. And so according to Value Line, which was both, these numbers were the same in both September and December, their sales per share are 45.40, and then they're expected to grow at a 5%, their revenue is expected to grow at 5% in the next 5 years. Next slide, please. And so 5-year annual sales growth rate, there's a little positive, kind of optimistic, 7.5 is what I entered. Next slide, please. And then I guess the high stock price forecast was 420.9. Next slide, please. The low stock price would be 120.9. I think right now it's somewhere in the 150s or 160s, maybe. Right there it is. It says 157.2. Next slide, please. Okay, and so this puts the stock in the buy range, and you can see that the buy range goes all the way up to 195.9. Next slide, please. The upside downside ratio is 7.3 to 1, which is relatively high. Next slide, please. They also provide a 1.7 yield in terms of dividends. So that's nice to have. And I guess there has been a dividend in the last 10 years, so it's not like something irregular happened and it stopped. Next slide, please. This is the amount for the dividends. Next slide, please. Yeah, and so I would consider it a large size, mature growth company. It's well managed. I think it's slightly undervalued. And it's, you know, I would definitely buy it. In fact, like I said, I did. Yeah, that's all for now. Thank you.
Thank you very much, Miriam. I know you got a lot on your plate between work and being a new mom. We're throwing SSGs at you as well. So great job. Next, go to our next slide. And Greg, tell us all about Zoetis.
Yeah, thank you very, very much. This is Zoetis. Zoetis specializes in animal health products. Next slide, please. So a little background on the animal health market. I never really knew any of these facts. I didn't know what Zoetis was until I started researching it. So they're projecting that the market is going to grow from 44 billion in 2025 to 65 billion in 2035. And the key drivers are pet ownership. A lot of people are buying pets, owning pets, and spending a lot of money on their pets because now it's much cheaper to have a pet. You don't have to send them to college. You don't have to open up a trust fund for them. All you have to do is send them to the vet and buy pet food, and then buy nice clothes and a basket to carry them everywhere in your life. Advanced veterinary pharmaceuticals in terms of keeping them healthier for longer periods of time and shorter durations of disease state, and also growth in livestock disease management. So we, by better managing disease among livestock, you come up with a overall higher yield percentage. And lastly, because a growing population and the expanding need for animal protein demand for pork, for fish, for chicken, for beef, and so that's why we're seeing tremendous growth in the animal health field. Next slide, please. So kind of interesting things. Over 50% of the puppies in the United States now are on triple combination medicines, which is flea, tick, and worm. 40% of dogs suffer from osteoarthritis at some point in their life, so there's a growing market there. And 20 million dogs worldwide remain untreated or undetected for itch associated with allergenic conditions and atopic dermatitis, which means we're looking at huge markets. And the United States has the biggest pet market in the world with 90 million pet dogs and 60 million pet cats. So that's a huge opportunity for anyone in the pet market and the animal health market. Next slide, please. And kind of what else? Market share predictions over the next 10 years. AI utilization for better intelligence to better automate and predict behavior, health, and nutrition. Industrial innovations, including gene-based animal medicine and blockchain-enabled veterinary drug authentication, smart equipment adoption in terms of even robotic assisted surgery for pets, and sustainability, cost efficiency, which is biodegradable veterinary implants and micro or biomed-based preventative medicine, and data analytics and predictive modeling to develop disease state modeling and better to ensure better health outcomes for your pets and also for farm animals as well. Next slide, please. So what about Zoetis? We've kind of gone a little far afield, gave you an overview of the market. Global leader in animal health, has kind of like three major markets: medicines, vaccines, diagnostic products, biodevices, genetic testing, and precision animal health. And has a diversified business across the core species, which is dogs, cats, horses, cattle, swine, poultry, fish, and sheep. Next slide, please. So they have over close to 14,000 employees worldwide, seven major categories, 8 core species, which we just talked about. Their products are sold in over 100 countries worldwide, and then marketed directly in approximately 45 countries and 22 manufacturing sites in 11 countries. Next slide. So formerly they were a part of Pfizer, and then they for 70 years, and then they spun out in 13 years ago, and they're as a Delaware corporation. Delaware is very favorable to corporate entities in terms of their law, and because of that, they have a great deal of kind of case law developed for corporate law. So it's a nice place to start your company. And so here's a laundry list of things that they do in terms of vaccines, dermatology, and medicated feed additives. Next slide, please. So when we look at who are their top competitors, you look at the top, they are head and shoulders ahead of their closest competition, which would be Merck, and then you have the other people that go down, you know, from 8.5 million, and that's 2023, all the way down to 30 million. So they're clearly dominant in the animal health market. Next slide, please. So here's kind of like where their manufacturing sites. They have a bunch of sites in the United States, but a number of sites in certainly Europe, Spain, and China, and Australia, and then one in New Zealand, and then one in Brazil. Brazil, by the way, is their second largest market next to the United States. Next slide, please. So what's happened in 2024? Their revenue was 9.3 billion, which was 11% increase year over year. Their adjusted net income was 2.7 billion, a 15% operational increase year over year. And then their diluted earnings per share was $5.92, which again is a 17% operational year over year increase. So, you know, strong numbers, nothing to sneeze at. What are the keys to success? Portfolio diversity. They saw one of their franchises grow 28% year over year. Their osteoarthritis pain franchise grew 80% operationally, and key dermatology franchise grew 17%. In dermatology, something we talked about in terms of itch and things that animals might experience. So it's a booming market. Next slide, please. So here's a breakdown. 5.1 of the 9.3 billion came from the United States. 4.1 came from every place else. Then we look at like kind of the market segmentation in terms of animal revenue, and then internal and external livestock. And you see that the United States is lagging in terms of its livestock revenue, but internal livestock seems to be growing, you know, alive and well. And then the so that's those are kind of the big things that are going. And then in the last quarter, they were 22.3 million, a little bit lagging behind in terms of where they were a year ago. And then also their percentage sales change is 4.7, and then the earnings per share it looks pretty good. Next slide, please. So here's kind of a breakdown in terms of what they're doing in terms of revenue segmentation. As you see, United States is 55%, 9% is Brazil, and the next closest market, interestingly enough, is other emerging markets. So other than that, you have 2%, 3% in between a bunch of other countries. Next slide, please. So here's kind of like what is the history from 2020 to 2024. We see that they've grown from 6.7 billion to 9.3 billion. We look at their low prices continues to grow despite, you know, like what appears to be a slowdown in terms of their growth. And then the earnings per share continues to be very, very strong, going from 3.2 earnings per share in 2020 to 5.47 in 2024. And so the 5-year historical growth is like almost 8% sales growth historically over a 5-year period, and 11.8% earnings per share over the same period as well. So very, very strong numbers. Next slide. So now when we look at
5 minutes, Greg, 5 minutes.
Thank you very much. When you look at where they're going in terms of total return, if you invested $100, they don't look as good, in fact, as against the S&P 500 index and also the S&P pharmaceutical index. So, which is kind of surprising. Next slide, please. But when you look at where they are in terms of 5-year sales average against their peer, they're clearly on the upswing, where their peers are industry average seems to be dipping a little bit, and also their peer group average seems to be kind of relatively flat. Next slide. So here's an interesting slide. So we look at the historical growth is 8.1%. Their estimated future growth is 4.3%. I'm sorry, 3.4%. Earnings per share 21, and then estimated earnings per share growth is about 8%. Next slide. So and then we look at like how do we evaluate management? We look at the numbers, of course, and so we see the last 5 years very, very strong numbers in terms of pre-tax profit, return on equity, and their debt. And we notice that their debt seems to be really kind of on it was a high of 2022 is 64.7, and it's going down to 58.6. 2023 was 57.5. So they're lower than their 5-year average, which is a really good thing. Next slide. Here we're talking about what is a current average. You know, their high is 100. Their high was $200.53. They close at 64, about $65. Their low is about $145. So again, still a solid stock. Next slide. So it puts them into the buy level and the high end of the buy area. So it's a solid stock to look at. Next slide. And then in terms of the overall forecast, looking at, I put my numbers in as an annualized appreciation 8%. So I'm predicting an annualized rate of return at 8.9%, where they're versus an annualized rate of return of 10.1. And next slide as well. So in closing, they're a leading health product for animals. Their historical earnings per share is about 22% with an annual growth rate of 8%. It's a buy, and I think it should be a candidate for the watch list because I think they're on the more mature side. So but you know, we're seeing a lot of growth in terms, particularly the pet ownership market. Thank you.
Thank you very much. Great job. Okay, now that we've done some in core, we're going to look at 2 stocks in plus. This is a more advanced feature in our stuff, and we're going to look at DoubleVerify as well as the undervalued feature LKQ. So Armita, why don't you get us started with DoubleVerify?
Right. Waiting for my first slide, please.
I have the slide up.
No,
This is
that's
just your
not
cover page. You want to move to the next one? Is that what you want?
Next slide, please.
Yeah, okay.
No? Okay, here we go. But you've done it a little differently. Thank you.
Well, it's just a format. When I downloaded, I had to come under this template, so it's going to look a little different.
No problem. DoubleVerify Holdings was founded in 2008. They're located in New York City, and they're a digital media measure and analytics software platform that obtains the revenue by ensuring that a digital ad is delivered in a brand safe setting. It's completely viewable by a real individual, not by bots, and is in expected geography that they want it to be seen. They're also obtaining their revenue through a subscription fee model that measures the volume of media transactions on the software platform. It's a small company, and as you can see, their revenue was $656.8 million, and the market capitalization is $3.65 billion. Next slide, please. Oh, excuse me. I forgot to say that I found this particular stock at Michigan Roundtable and also Ticker Talk, and also at the 2024 BI conference. Thank you. Next slide. Also, this particular company is located in the technology sector, and its industry is software application. DoubleVerify makes it, what do? They make advertising stronger, safer, or more secure through their software solutions by providing media safety and quality of media performance, by providing better advertising outcomes for the customers. And the customer challenges that they face are that they need to be able to ensure better brand safety, fraud, viewability, and location-based advertising. Next slide. DoubleVerify's business model is to provide essential solutions to global top brand diversified client base with what they call a verify everywhere strategy for fixed fee. And what they think they do that differentiates themselves from their peers is that they feel that they build strong loyalty based on their scale, their innovation, and trust items. Next slide. What we mean by scale, it's based upon their verify everywhere strategy. And what this means is that their software solution encompasses all platforms, formats, devices, and content types across the world. And since 2002, they've processed more than 8.3 trillion media transactions. Next slide. In terms of innovation, one of the things they've done is they have created what they consider a customized and authentic third and partial verification software, which ensures a certified privacy and information security. And also they're able to provide a measurement and analytics software platform where they are able to learn and optimize the outcomes for their advertisers. Next slide. In terms of building trust, they feel that their security software meets most of the widely available and recognized international standards for information security, protection, and confidentiality. And they feel that this promotes long-term customer growth and client relationships. Next slide. As you can see, DoubleVerify has services some of the world's largest companies and brands as its clients. And just in 2024 alone, they had a 36% growth in new clients and a 64% increase in expansions and upsells in their current clients. Next slide. This slide is a breakdown of DoubleVerify's revenue model to better understand what their business strategy is. As you can see, based upon customers' products, integrations of the software into other people's platforms, and also their transactional model, as well as not only do they serve advertisers, but they also serve publishers. Next slide. This slide shows that DoubleVerify has a strong historical growth across all revenue streams since 2018. And as you can see, the volume of media transactions has grown 27% from 2020 to 2024. Next slide. This shows that DoubleVerify has also established what we consider long-standing relationships, and also they've been able to provide exceptional retention of their current customers and clients. In 2024, they showed 112% net revenue retention rate, and as you can see, a greater than 95% gross revenue retention rate. Next slide. DoubleVerify also shows a strong history of growth and profitability in revenue and earnings. As you can see, year over year since 2018, both revenue and earnings have grown year over year. Next slide. This slide shows that they also have a very diversified client base, which reduces the variability or the volatility in their revenue based upon customer spend, reducing their dependence on any one business client or any one business sector. Next slide. DoubleVerify has a strong balance sheet and cash flow generation with little to no debt. And so they've been able to support, this will enable them, to support their future growth strategy through acquisitions, share repurchases, and investing in their organic growth. Next slide. My stock selection guide shows that DoubleVerify has been increasing their revenue growth year over year. They did have a negative earnings per share in the fourth quarter, missing analyst estimates. Revenue estimates were missed as well. It also shows negative growth in earnings per share and pre-tax profit for 2024. But future estimates for revenue and earnings remain high for future years to come. if you'll notice, though down in evaluate management, return on equity still remains relatively low. Next slide. What I did is I took some clips from Manifest Investing, also from Value Line. When I first started researching this stock back in December, Value Line did not cover DoubleVerify, and nor did Morningstar. And so that's why I first went to Manifest to get information to try to help support the numbers that I'm using in my future estimates. And so as you can see, in terms of earnings per share forecast, they said $2.07. Sales forecast was around 19.8%. Value Line is now saying that earnings per share should be around 42.8. And also, if you look at the chart from the FESH in terms of quality, you can see it has both a high as well as a great par. Next slide, please.
5 minutes, Amita, 5 minutes.
This slide shows the estimates for my review on DoubleVerify on January 9th. It was trading at $19.96 with an average P of 89.2 and a current P of 53.9 with upside downside ratio of 3.1. Next slide, please. DoubleVerify reported revenue earnings for their fourth quarter recently, and this drop was due to decreased advertising spending in the fourth quarter, as well as a low projections going into the first quarter 2025 due to economic uncertainty. And so on February 28th, the stock price dropped 38% to $13.90. The stock is a buy with the current PE of 44.8, which is the Value Line estimate, with an upside downside ratio of 5 to 1 and projection of 16.3. Next slide, please. DoubleVerify has multiple avenues of significant future growth expansion from its current growth strategy. This next slide shows that, next slide, please. This next slide shows that DoubleVerify believes that their business has potential to have a multiplier effect in terms of the revenues in order to cross-sell and also upsell opportunities. Also, they have recently acquired a company called Scribs Technology, which is a global leader in AI-powered digital campaign optimization in 2023. We also recently acquired Roadblocks, which provides two-step verification, and I'm sure a lot of you are familiar with that. Next slide. This is used to support DoubleVerify's strong profitability and cash position in order to show you that they're able to continue doing as they've been doing in the past in terms of their growth. Next slide, please. The summary. As I said earlier, the pros are that it's a buy with an upside downside ratio of 5 to 1 with a proven history of growth and profitability. It's undervalued. It's got significant growth opportunities. It has a strong profitability and cash position. They have brand recognition. Analysts have estimated future revenue and earnings per share growth to still be in the high teens year per year. They recently acquired Rocker Blacks to enhance their capabilities for performance and optimization solutions. The cons for DoubleVerify are that it's got high PE compared to its industry peers. They missed analyst expectations for fourth quarter and reduced estimates for first quarter 2025. And also they're having a slowing of their high growth, which is going to be less than 20% in revenue and earnings per share. Thank you.
Thank you very much, Armida. And last but clearly not least, Lisa's going to tell us all about the undervalued feature tonight, LKQ. Take it away, Lisa.
Okay, so LKQ Corporation, and I'll probably refer to it as LKQ throughout because, as you'll see, there are many umbrellas underneath them. They're a leading provider of alternative and specialty parts to repair and accessorize automobiles and other vehicles. LKQ has operations all over the world, especially in North America and Europe. And they offer customers a broad range of OEM, which are original equipment manufacturer parts. And they offer recycled parts, aftermarket parts, components, equipment, anything you can think of on a vehicle, they offer it. And they were started in 1998 by Donald Flynn, and he started them by acquiring a bunch of wholesale recycling facilities all throughout Central North America. And then they did their initial public offering in October of 2003. Next page, please. And so you'll see that they're on page 25, and definitely read the article. I'm going to touch on some things in the article, but they recently had an earnings call last week, and so I'm going to highlight some of those things as well. Next page. And of course, they're a consumer cyclical in the auto parts industry. And what makes them unique, besides they have 1,700 facilities across North America and Europe, and they have like your local junkyards, which is kind of where I spent part of my youth with my dad, going to find different parts for his cars he was working on. Or they have the big salvage art as well. And they are starting to develop what they call mega yards. And we'll see a picture of that. But they're able to buy land and have a bigger assortment and variety of cars for people to look at and buy the parts of. And this, of course, is they're going to, I think, become even more profitable in the future, because with the average age of a vehicle increasing that people keep it, they're not going to be able to find as many parts, at your local Ford dealership. They're going to have to kind of go in, and this is where these shops come in. And a statistic from the Bureau of Transportation sets the average age for autos and light trucks at 12.6 years, and that was in mid-2004, up from about 12.4 years in 2023. So people are starting to hold on to their cars a little longer. Next page. And so they have 45,000 employees, over 1,600 locations, 25 countries. So they are huge. And their employees, mainly at the bigger facilities, will dismantle salvage autos like trucks, engines, transmissions, doors, trunks. Again, like I said earlier, you name it, they can get it for you. And they even have gotten into recycling the scrap metal derived from salvage vehicles as well. So if a car is wrecked, it goes to these places, and they will take it apart and get money wherever they can. Next page. And so these are some of the brands, they have doubled this, that are underneath the LKQ umbrella. They even have, they're getting into green batteries, your heavy trucks, again, North America, even Canada, and French-speaking Canada. Thought that was neat. Bumper to bumper, also catalytic converters, you name it, they have their finger on it. Next page, please. And these are the main cars that they have. They don't necessarily have agreements with these brands, but if you're looking for something from Saturn to Saab, even to Ford and Jeep, they have it all. Jaguar as well. And next page. And so here's a picture of the mega yards that I was talking about earlier. Like they also distribute to collision shops, mechanical repair places, dealerships even, and retail dealers are their customers. And they offer a reduced cost alternative to parts from the OEM. And their key sources of inventory come from salvage auction businesses, which receive damaged vehicles that insurers have written off. And LKQ will retain the vehicles directly from these insurers, manufacturers, and private owners. And so, so last year they obtained about 258,000 vehicles in North America, and about up from 5% in Europe, 246,000. So they have a lot of vehicles. Next page. And this is just kind of a shot from the magazine. And this was in September 30 of 2024, just to give you an idea. Their current stock price is 42, and I think it went to 42.68 in after hours trading. But they're looking better. But I wanted to give you a snapshot of earlier in the year. Next page. And so they have 4 business segments, and this I'm going to kind of touch into what their earnings call was. Their fourth quarter revenue call, which happened just last week, they had a revenue of 34.3 billion annual revenue, and that was fourth quarter, and the annual revenue of 14.4 billion. So they're definitely a very large company making some money as well. And in North America, like I said before, with the heavy truck operations and general anything about a car, they are doing. And they also do alternative vehicle collision replacement products. So again, anything with a car. And so and next. Oh, next slide. Okay. And so this is their fourth quarter for North America. Down a little bit in revenue and gross margin, kind of the only place that they're up is the segment EBITDA. But there's a reason for this, which I'll get to in a little bit. Next slide. And they also have a specialty market, which is the acquisition of Keystone Specialty. It's a leading distributor and marketer of specialty vehicle aftermarket products. And this includes your RV, your truck, your off-road, the big tow trucks you see on the road, even some of the more like the sports cars with the performance handling. Next page, please, or next slide. And so again, the only segment that's really up a little bit is the SG&A, but kind of like on the gross margin, it's comparable, and a little slight decrease in revenue on total revenue there. Next slide.
5 minutes, Lisa, 5 minutes.
Thank you. And so they also have the Europe branch, which you can see kind of just European cars. Again, everything that the US does, they do as well. Next page. Next slide. And this is starting to even out a little bit. Europe, they've been really going through and fine tuning their SKUs, which is their SKUs on the different parts to kind of get a better attention to detail in that segment. Next page. And this is something I wanted to put in here. This is their fourth group, which is self-service and metals. And so these are the scrap, steel, platinum, everything, and that kind of, and they track that. And that gives you an idea of how much they're making off that segment. Next slide. And this is the value line review. They didn't get a new value line in until yesterday. So nothing, not too different. The only thing, their timeliness is one on this one. And then they even, yeah, I think that was, everything else is pretty close. Next slide. Here's just a quick glance at the Yahoo Finance. They've beat their earnings the last couple of times, which is good. Revenue and earnings are pretty even. And the analyst recommendations, a lot of them are strong buy and buy. Next slide. Here's just a quick, so they can look at their competitors as everyone that sells parts, including used and new. And the green one down here is Vox, which Vox is a specialty one. They do aftermarket electronics and consumer, but they are considered as well a competitor. So I put that on there. But they all seem pretty in line. Even Vox a little bit lower kind of still follows the basic trend. And there is, for the outlook for the auto industry parts, continues to be mixed. And of course, with the tariffs coming in, that's going to have an effect on people wanting to buy used cars, or I'm sorry, new cars. They're probably going to want to stick to the used cars already in the States and also used parts in the market. Next page. And this is to evaluate management. Their ROE's down a little bit, but the average is 15. So that's good. Debt to capital is not less than the recommended 33, but there's a reason for that. They're starting to buy some other companies and sell some of their other non-profitable divisions as well. Next page.
2 minutes, Lisa.
Thank you. So I kind of kept with the recommended marks for sales and EPS. Next page. Again, that one you can look at a little later. On the next page. Here, they're kind of, sales. There is a little bit in 2023 of where sales goes above the earnings, so that's something to look at. And that's been mentioned in some of their earnings calls, but they are working on that. Next page. And so here's the liquidity ratios real quick, just to kind of give you an idea. Looking good. And the next slide. And so their earnings summary, they've been under pressure, like they're kind of looking at North America as their main, and there's been some decline in demand for auto parts recently, but they are looking, and they discussed in their recent call, they have a new CEO as of July 2024. And they are also, they have some new board members that are looking at business strategy and I guess their specialties, business strategy and operations, and they're simplifying their portfolios. They've divested of 5 businesses in Europe. And so I feel that this is kind of a group that has gotten big, and now they understand they kind of need to refine and kind of make some changes for the future. Next page. And so this, they're a slower grow company, but I think they're managed pretty well. And I think with the new management they're definitely going to improve. And right now, I think the stock is a hold, but I definitely would watch this because I feel that they're on the edge of greatness if they get everything together and become like a more refined company. So I definitely would put it on your watch list. And that is all.
Thank you very much, Lisa. Appreciate it. So now we're going to do a little bit of a recap of the 4 stocks that we just looked at. And just sort of FYI, the presenters, Kent's been responding to you in chat and alerting you that a couple of folks have asked questions about your stock. So presenters, look in the question box and you'll be able to see what's coming up. But what we want to do here is we want to be able to just sort of give an overview of where these all are. So let's go to the next slide and we'll tell you how we talk about fitting into the life cycle. This comes from T. Rowe Price. It's in our handbook as well, and that the companies really have sort of a life cycle of growth, maturity, and decadence. We're going to ask all 4 of the presenters to tell us why they selected this location for each of their stocks. So why don't we start with Armida? Why don't you tell us why you picked that location for DoubleVerify? Are you unmuted?
Sorry about that. I said I chose that location for DoubleVerify because it is a small company, and it has been growing at a rate of 30-something% for the last 5 years. And so I see it definitely as a, being very early in its life cycle.
Okay, very good. Greg, you want to tell us why you picked that location for Zoetis?
Sure. I think while it's a strong stock and it will continue to grow, I think they're slowly, we're going to see we're going to see it lose a little steam. And I think when we noticed, and I didn't point it out, that the high points in terms of their shares and their explosive growth was during COVID, when people were sitting at home and spending more time with their animals. But now that people are getting out more, I think we're going to see a little slowdown in terms of their particular growth.
Very good. Miriam, you want to tell us why you have that location for Qualcomm?
Yeah, I think that, there are good days coming still for QCOM. They have this technology that makes them quite unique. They have all kinds of partnerships. I think I discussed in my presentation one with Samsung, but there are at least 8 or 9 other brands that are using the ARM architecture. So I do think that they're going to grow, but it is, as we all know, a very competitive industry, and I I don't think that it's at a place of explosive growth anymore. But yeah, thank you.
Okay. And Lisa, tell us why you have that location for LKQ. Like, kind,
Well,
and quality.
I think they've had some explosive growth and they're on the edge of being mature, but also after their last earnings call, I feel they might kind of slip back into some growth because of, just how they're going to realign the business and kind of trim it. So.
Okay. Very good. So we've been doing all this chatting. Let's go to the next slide. And we're going to ask you to vote. And it's not so much voting on which one you think is a buy right now, but which one of the presentations interests you enough that you'd want to do your own research or do additional research. Because again, we're sort of a learn by doing organization rather than taking investment advice. So Cheryl, go ahead and release the poll and tell us what's going on. And while we're doing this, I have to give a shout out. We have, between those of us here in the back room and those in the audience, we have like 17 people that have made presentations out of the 40 or so people that have done it. So thanks to all the people that are in the audience. They have a really nice crowd tonight. So thank you. And let's see how we're doing on the poll. We have just over 40% of you. Again, it doesn't cost anything to do this. So go ahead and make your choices. Okay, one was on 0. They finally got a couple votes, so that's good. We won't tell you what until we get there. Okay, we're just about 60. Can we get up over 70%? Let's see. It should be just a couple more votes. See what we get. Looks like things are slowing down. Come on, give me 1 or 2 more votes. I got 1 more vote. Can I get 1 more? All right, I don't think it's going to happen. Let's go ahead and close it out. And then we'll take questions from people in the audience. You can either raise your hand or you can sit there and we'll take it from the question box. And there you can see our big winner is Zoetis. Greg, everyone likes their pets. So they're going with the stock to study for tonight. So thank you very much. Kent, you want to take us through some of the questions?
Sure. So first question is for Miriam. So what do you make of the sales today by the CFO and the CFO and the COO of Zoetis of 3,300 shares?
Zoetis was my
Oh,
presentation.
sorry, Greg. Sorry, Greg.
But I would welcome Marion to answer the question on my behalf. I'm fine with that.
My bad.
You wouldn't want me to do that. Sorry.
Well, I saw the question. I just saw it. I looked it up. And to be quite honest, I don't know. I mean, I don't necessarily make anything out of it. It's the dollar value is about 58,000. Maybe they wanted a new deck or something. I don't make anything specific out of it. If they sold like 10,000 shares, it'd be a different story. But that many shares, I don't necessarily at basically $164 a pop. I don't necessarily make anything out of it. I think it's just timing.
Yeah, on that thing, I looked it up as we were going from it. I'll put it in the question to everyone. But the guy owns like 59,000 shares of stock, and he sold 3,300. So I mean, he could be doing it for anything. He could be doing it because he has to rebalance his own portfolio, or he has to pay for a kid to go to school. That isn't necessarily inherently bad. But I'm going to take that question and I'll turn it into, I'll ask here, I have the hyperlink on it. Let's take our next one. But I put in the question, if everyone looks, I gave you the link to investing.com. That's Investor Business Daily. Go ahead, Kent.
Yeah. So the next question was for Armita. And in slide 79, you refer to CPG. And Robin asks, what does that mean? And I'm not sure, and I couldn't answer it.
I have to look because I don't know what that slide number is. What was the reference?
Let me get over to slide 79 real quick here.
Cheryl, can you just move us back to slide 79? There it is, up at the top.
Oh, yeah. It's their largest revenue source.
Oh, again, it's an industry. CPG is, okay, but it's an industry, just like retail, healthcare, financial technology. I'm not quite sure what CPG is. I tried to look it up and couldn't find it.
I put it in the questions. It's consumer packaged goods is what
Thank
it
you.
is. So when I ever get stuck on something like this, my go-to is Investopedia.com. There's no connection, no benefit from that, but they always are really good with a lot of stuff going on there. So there's a link to it. I shared it with everyone and all. What other questions do we have?
Ask about the PE of 50. And I did respond to that answer saying that 50 is down considerably from the that I used for my high PE. Is down considerably from the 5-year average PE that they had of 84.5. And it's only slightly higher now than the current PE of 44.8.
Cheryl, if you move to slide 83, that will get to where Armita's talking about.
Okay, here. Okay. The next slide. After that one. That one, yes. Okay. As you can see, the 5-year average, she's asking under number 4. I used as my average high PE of 50. All right. And I selected that number 50 because the fact that my 5-year average PE, after I took out from the low PE, I took out I'm sorry, I'm using the wrong number. In fact, you can see the 5-year average is 119. Yeah. And so what I could see, the trend is dropping considerably for the PE values, particularly with regard to price. And so I chose the average high PE of 50, which is slightly higher than the PE value of 44.8. Does that help?
Yep, did that help you, Rebecca? And let's see.
Any other questions? It looks like we have quite a few.
We have one more question. Are there okay, this is probably for you, Kevin. Are there waivers for high debt to capital ratio? I thought we should consider 33% or less. I thought Qualcomm was above 50, and I would need to go back and look at that real quick.
Miriam, do you have any comments on the debt to capital on that one?
I'm sorry, a little bit distracted. Can I get the rephrasing of the question, please?
Oh, sorry. So the question was that the first, what was the debt to equity ratio or the debt to capital ratio of Qualcomm, the long-term debt? Because Richard was thinking that it was above 50, and I can't find
slide,
it.
Yes,
slide 32.
51.
If we go to slide 32, we'll find it.
Thank you.
Yes.
Oh yeah, there we are.
Yeah, and you'll see that the year 2018 is an outlier with 94.6, and that has to do with the losses of the deal that had to do with the U.S.-China trade dispute. So if you take out that year, I think you might see a different number in terms of average of the last 10 years. Now, for the last 5 years, the average is over 50, but you can see it decreases quite a bit from 2020 to 2024. So I don't know if that helps.
I think that actually looks very healthy, that the way they're moving down.
Yeah, that's a really good, great looking graph.
What other questions do we have, Kent?
Oh, let me get back
I'm glad
over
we're
there.
having some questions tonight. This is good.
Okay, so that's the last question we had, at least on the chat. Does anybody have any questions and they would like to raise their hand, and then we will go ahead and open up the microphones for you to ask your question live as opposed to Memorex.
Cheryl, let's just move to slide 117.
I think we're good, Kevin. I'm not seeing any questions, but I'll still keep an eye on it just in case there's a last minute.
Here's some places to be able to reach us. And there's a picture of many, but not all of us that have done presentations. This was at Bink in Chicago last year. But you can be able to reach us either for digging into the BI at that email there, or from either the Maryland chapter or the DC regional chapter. Again, we had a really nice registration and a pretty good turnout tonight, so we appreciate that. And this is all successful because all of you are participating, and we like that very much. Let's go to the next slide. And if you want to be able to be on our mailing list, we don't post a lot of things, but we do a really good job of keeping this out. Carol keeps us on the straight and narrow with that. Just sign up. You don't even have to be a BI member. Share it with your friends. We just want to try to grow the community and make it better. It's even better if you're in Maryland, DC, or Virginia, but we don't care where you're from. Just come and join us and participate. Next slide. Kent, all to you.
All right, and as Kevin has mentioned several times, everybody who participates in this event are volunteers. And we do this because it helps us learn quite a lot and helps hone our investing skills, make those a little bit better. And we provide a service that we really, when we provide this service, we actually get probably more back than we're giving out. So those are some of the reasons that we do this. One of the benefits that you can get out of this is improving your investing knowledge by attending the national training programs, Better Investing National Conference at a discounted rate by becoming a chapter volunteer. And additionally, you can receive complimentary subscriptions to the investment tools that we use during the digging into BI. So that's some of the reasons that we would like to have folks volunteer and some of the benefits that you get out of volunteering. Next slide, please.
So we don't have the upcoming featured stocks, although I just got an email from the editor of BI Magazine. The stock to study in April is going to be Microsoft, and the undervalued feature is going to be Hershey Foods. So we still have to pick out a couple others. I know one person suggested or wanted to look at Eaton, and we have a new person, Daniel, who's in the audience, who may want to pick something else. So those will give you an idea of some of the stocks we're looking at and trying to be as fresh and as earnest as we can. It'll be the first Monday of the month. Please join us. Please share this with your friends. Please go to our YouTube page and like all the videos. It helps with the algorithm. Subscribe and share it with your friends. This is how this community works. We want to be able to help build it through all of this. Again, our goal is to be able to help you find well-managed growth companies at a reasonable price. Any other questions?
I'm so glad that Hershey is now considered food.
It is. It's one of the four main food groups, right up there with salt-based products and alcohol and cigarettes, right?
Absolutely.
The four main food groups?
Indeed. We have no more questions, so I think we are good to continue on.
All right, let's go to our next slide. So we also have stuff up on Manifest. I'm doing a little remiss in getting the dashboards updated. I'm going to maybe even work on that tonight once we're done. But if we go to the next slide, you can see these are all public dashboards. You don't have to be a member. I have a subscription at Manifest Investing, but it's a great way to just sort of track what we're doing and how things have worked over time. It's really kind of fun to sort of see how our judgments sort of hold over time. So please go ahead and look at those. All of these are hyperlinks that will take you to the exact location. Again, you don't have to be a member of Manifest to be able to look at these. Next slide. And finally, again, there up at the top, there's the YouTube channel. Please join us. We're so glad that you were here. We had a great crowd tonight. Please share this with the community. And please come back next month when we're going to look at the April edition of Digging into the BI. Thank you very much, folks. See you next month. We'll keep this open for just a little bit in case you haven't downloaded those handouts, but you can take it away. If you want to go, you can go.
Yep, there's the handouts right there. There's 5 of them. The final PDF, and then
I don't think you're waving, but they can't see it. All they see is on the main screen.
okay.
So, but again, and thank you to all our presenters. You did a great job. I'm really, really proud of all of you.
Yes, I second that.
I'll third that. Good night, everyone. Have a great rest of your week.
Hey, Kevin,
Yes.
when do you have me next for presenting?
Great question. May.
Okay, good.
I'm looking for new presenters for June and July. I want to roll in some new people to sort of help us. So let's be on. You're good at finding those newer folks that I've been missing.
Okay, I will put out a feeler, and if anybody who's still on the on this program would like to do so, it's a great opportunity if you belong to a club to advertise your club, just like 2 people did tonight. To you know, especially if you are looking for new members for your club, this is a great opportunity to state that to a rather good sized audience. We had 196 people registered for tonight. So very proud of that, that our people are interested enough to register for the program.
Very good. I think everyone that's left is sort of, they may have moved on to other things. So let's go ahead and shut things down. Good night, all.
right.
We'll see you next month.
Okay.
Sorry,